Hey everyone, welcome back to The Explainer. Trade commodity markets, you already know that spotting a massive potential breakout before it actually materializes, well, that's literally the name of the game. And right now, we're breaking down a golden setup, literally. The gold market is showing some serious signs of a major shift, and we're going to unpack exactly what the latest data from Chartbuster 7 is telling us step by step. Okay, let's dive into this, because this is the massive question on every single smart money trader's mind right now. Can gold actually hit 4512 next? You know, historically, when gold coils up this tightly, the breakout isn't just a slow, casual climb. It's explosive. And 4512 isn't just some random number pulled out of thin air. It's the ultimate target in a super high-stakes setup that's unfolding right as we speak. I mean, the tension in the market is just palpable. Price is holding steady, momentum is quietly building in the background, and honestly, a breakout move might actually be starting right now based on the data. Let's look at the structure that makes this 4512 target a very real possibility. So, zooming out for a second, the broader structure is flashing a remarkably strong bullish recovery. This is exactly the type of structural shift that smart money traders absolutely live for. It's not just market noise, it's a very clear fundamental change in the market's behavior. The bears are clearly losing their grip, and the bulls, they're starting to flex their muscles. But to really understand why this recovery is so structurally sound, we have to look at the underlying foundation that's actually holding it up. And this brilliantly illustrates what's going on. The entire foundation of this move lies right at a critical demand zone. Specifically, we're talking about that pocket between 4460 and 4470. Every single time the price dips into this specific area, buyers are continuously stepping right back into the market, just eating up all that selling pressure. There's a real sense of urgency here, you know? The price is fiercely holding this level, and as it holds, that upward momentum just keeps building and building like a pressure cooker. Now, these individual signals are stacking up perfectly to tell a really cohesive story. We already know the price is holding above that key support zone, but the real key here, the absolute classic bullish signal, is the formation of higher lows. You know, in modern trading, it's really about AI, human cassette, right? The algorithms and charting tools flag these incredibly precise higher lows and that increasing buying pressure. But it still takes a human trader to contextualize the fact that the bulls are firmly in control. Buyers are actually willing to pay slightly higher prices during every single dip. And that tells us that as long as the price stays above our support, a continuation straight to the upside is highly, highly probable. All right, so understanding the trend is great theory, but executing it? That's mechanics. Let's shift gears and zoom right into the clinical numbers required to actually play this setup. So the crucial point is treating these exact mathematical boundaries as your ultimate blueprint. No guessing. Our long entry zone is hovering right between 4460 and 4470. That's the demand pocket we just talked about. Your stop loss? That must be placed just below that, under 4457, to tightly protect your downside. Now, if the momentum plays out like we think, Target 1 sits up at 4490. And if the bullish structure holds its full course, boom, we hit that final target of 4512. These are the rigid, no-nonsense parameters that professional traders are watching incredibly closely right now. But hey, having the numbers isn't enough, right? Timing and patience are literally everything here. I cannot stress this enough. Please, do not chase this trade emotionally. The true separator of successful price action trading is waiting for the confirmation process. You absolutely must wait for strong bullish candles. You've got to observe the volume confirmation, and you have to verify the proper price action before entering. The confirmation matters just as much as the levels themselves. Let's move to and see how this builds, because before we get totally swept up in the excitement of a massive 4512 target, we have to address the sobering reality of professional trading, and that is risk management. I want you to listen closely to this. Trading is not about winning every trade. It sounds simple, but it is a fundamental truth that the pros deeply, deeply understand. It's not about ego. It's about protecting your capital, meticulously managing your risk, and just staying consistent over time. Look, you can have the absolute best setup in the world, just like the one we're breaking down today. But if you don't manage the downside, you simply won't survive long enough to reap the rewards of the upside. It's that simple. Which brings us to an absolute non-negotiable rule. A stop loss is mandatory, period. You must never risk more than you can afford to lose. Even in a setup that looks as huge and as highly probable as this gold breakout, the market can and will always do the unexpected. And that is exactly why that protective stop loss below 44.57 is built right into the blueprint. Think of it as a seatbelt that keeps your capital safe if the market structure suddenly decides to shift against the bullish trend. So, bringing it all back to the ultimate question we started with, do you think gold actually has the momentum to shatter that 45.12 ceiling, or is this the ultimate trap before a massive reversal? I love to hear your take, so let me know your read on this price action below. And hey, if you want to stay ahead of these high-stakes shifts and get more high-quality market breakdowns, make sure to subscribe to Chartbuster 7 and turn on those notifications so you never miss a high-probability trading opportunity. Thanks so much for learning with me today. Protect your capital out there, and we'll see you in the next explainer.